We thought a lot of those tariff disruptions when it came to the markets may have already been resolved. What's your outlook for just this entire week now that the president has said that there could be new tariffs on the EU and Mexico starting on August 1st?
Yeah, clearly Trump is using this for not just the trade policy, but also just what he's trying to get out of Europe in general. Like you hear, we're going to get some news on Russia today, and part of what he's looking for from Europe was to try to get them to spend a lot more on defense. And you're hearing that, maybe we supply more weapons to Ukraine, but that the allies in Europe are buying it. And so, he's clearly trying to do more than just tariffs, but we're going from free trade to friend trade. And, this whole big thing on you got to be close to what he's looking to do all around the world. And it's just a different regime.
Daniel, I want to come back over to you. I'm looking at the EU markets right now. The stock's down about 1/3%. The DAX hit a bit harder. The FTSE, UK, that obviously, as Steve just mentioned, had a deal with the U.S. actually higher. Are you surprised that we're not seeing a bigger impact in the European markets? Is that perhaps a sign that investors there are seeing a quote-unquote taco trade, that the president won't live up to these, threats, I guess you could call it, of August 1st tariffs on the EU?
So not surprised that the European markets haven't reacted more negatively. I would come up with a different explanation for that, however. I think we've seen this movie many, many times now. It's like it's a rerun, if you will. But we know it's all about raising the level of attention on a particular area that Trump's focused on, getting some progress where he feels there isn't enough, and then once that's achieved, the tariff levels can go back down. So, is negotiating tactic, as has been said. I don't think anyone really believes these are the numbers that we're going to end up with in a month or 6 months or a year. But I think what we will see, and I've already seen indications of, is more movement on the EU side, on Mexico's side, to find what Trump is actually trying to achieve and to address those concerns.
Jeremy, come back over to you. I'm looking at the VIX, sitting at about 17, 18, so not that elevated right now. But when we're looking at investors here in the U.S., what do you expect them to do? Do you expect them to go back to tech as a safety trade? Do you see them moving into other parts of the market? What's your expectations this week with, again, trade really dominating the headlines, at least today?
Well, we're getting into the earnings season, and I think, our outlook for earnings as we get later in the year is actually very, very positive. We've had a 10% plus move in the dollar. That is one of the strongest factors for sort of relative earnings growth. Now, it may not be this quarter. I think it's going to be more like the November, December, January timeframes when you start seeing earnings later this year. You're getting an extra boost. What people are looking for, it's always been this big AI move. The question is, can the smaller companies start lowering costs, improve margins from the use of this technology? We expect that also perhaps next year, but it's all about earnings, and right now it looks quite good.
All right, so you mentioned it's all about earnings. By the way, LSEG out with its data last week. So if you look at comm services and also tech, that makes up pretty much all the earnings growth. Without them, the earnings growth would actually be negative, according to LSEG. You also highlight the valuations of the Mag 7. The Mag 7 sitting at about 31 times forward earnings. The rest of the market, minus the Mag 7, at just under 21. Do you believe that the earnings growth that we're going to get from those Mag 7 stocks, is that going to justify this valuation?
It's starting to come closer together. When I look at the trend for Mag 7 versus everybody else is starting to catch up. That spread between how much better Mag 7 is versus everybody else is compressing. And so I think that is the case for the relative outperformance of smaller caps. Going beyond the S&P 500, you can get 13, 14 times earnings for a lot of the smaller value companies, and I think those are the companies that can actually benefit from using AI. So I do have an outlook that eventually that rotation is coming.
All right, Daniel, coming to you with maybe the toughest question of all. If you want to be an investor outside the U.S., specifically in Europe, where are there opportunities with this potential disruption kind of looming over the European markets on August 1st?
I think if you're looking at Europe, you probably need to focus on where you're going to see the benefits, because it's not an across-the-board positive story for Europe. There's still the structural issues that we know well about, and we are going to have tariffs at some level, and that's going to be a hindrance for the large-cap exporters in the continent. On the positive side, though, we don't want to forget you are going to have that defense and infrastructure investment coming. We just saw Macron announce over the weekend a big increase in French defense spending. There's going to be a seminar or a big announcement from CEOs in Germany about how much more they're going to be doing on the infrastructure side. So those are the positive factors. And on one hand, even if you're not going to see that in corporate earnings right away, it is something that's going to happen over a long period of time. So it really is a sustainable positive driver for those parts of the European equity market.
Before I let you go, how are you viewing Japan and South Korea? The president specifically mentioning those two countries when it came to trade negotiations.
Well, what we're looking at when we think of emerging markets, shall we say, or Asia, is seeing the opportunity more in tech-oriented markets than necessarily non-tech. And Japan's an illustration of that. I mean, if you think about the impact of tariffs, it's going to be on goods producers, all the tariffs on goods imports as opposed to services. And tech, broadly speaking, is much more services-oriented. So that's why we do have a bias or a preference towards technology. Our overweight's actually to NASDAQ in the U.S. as opposed to those goods-dependent markets.